Welcome back to Iraqi Dinar, your trusted source for breaking updates on global currency movements and revaluation news. I'm glad you're here today because what's happening right now with the Vietnamese Dong might just be one of the biggest stories of 2025. Reports are swirling across financial networks that the Vietnamese Dong may have just revalued, and investors everywhere are paying close attention. Could this really be the moment many have been waiting years for? Let's break it all down, step by step, and make sense of what's unfolding. The buzz began earlier this week when several exchange platforms and trading outlets started showing a slight adjustment in the official Dong exchange rate. Now, in currency terms, even a tiny change can signal something much bigger behind the scenes. People are calling it a revaluation, and while that word always sparks excitement, it's important to separate hype from reality. The big question is, what's actually happening in Vietnam's currency policy? And is this a one-time shift or the start of a much larger plan? For those who've been following this story for years, you already know that Vietnam's currency is carefully managed. The State Bank of Vietnam controls the Dong through what's called a managed float. That means the bank sets a daily reference rate and then allows the Dong to move within a narrow percentage range. It's a strategy designed to protect Vietnam's export-driven economy from sudden shocks. But with today's news, analysts are asking, is Vietnam finally allowing its currency to move more freely and strengthen naturally? As of now, the Dong is trading near 24,000 per US dollar, but reports suggest that some banks are quietly offering slightly stronger rates, a subtle but potentially meaningful sign. A move like this may seem small on paper, yet in currency markets, even a minor appreciation can hint at a deeper policy shift. Some experts believe Vietnam might be testing the waters before allowing a more significant strengthening phase. Others think it's a deliberate first step in a longer-term revaluation roadmap. To understand why this matters so much, we need to look at Vietnam's broader economic transformation. Over the last decade, Vietnam has turned itself into one of Asia's fastest-growing economies. Tech giants and manufacturers from the US, Japan, and South Korea have poured billions into its industrial zones. Exports are booming, especially in electronics, garments, and machinery. With all that foreign investment flowing in, the Dong's fundamentals have become much stronger, and that's fueling natural pressure for it to appreciate. Now here's where it gets interesting. A stronger currency can be both a blessing and a challenge. On one hand, it reflects confidence in the country's growth. On the other, it can make exports more expensive to foreign buyers, potentially slowing down sales. That's why Vietnam's central bank walks a fine line. They want stability, not sudden shocks. Any major overnight revaluation could rattle exporters and affect business planning. So if the rate is changing, even slightly, it's almost certainly part of a controlled, gradual process. Investors who've held Vietnamese Dong for years are watching this closely. Even a small upward move could have meaningful implications for their holdings. Remember, in global currency markets, long-term gradual strengthening can often be more valuable than sudden, unpredictable spikes. The pattern we're seeing right now suggests Vietnam could be entering a phase of slow, managed appreciation, not a dramatic overnight jump, but a steady climb. So what's driving this movement? Several major factors. First, Vietnam's impressive GDP growth, still one of the highest in the region. Second, increasing foreign direct investment. As more companies shift manufacturing out of China, Vietnam has become the go-to alternative. And third, its relatively stable inflation rate, which strengthens investor confidence and gives the central bank more flexibility. Together, these forces create strong upward momentum for the Dong. At the same time, Vietnam's financial leadership has been sending subtle signals about currency flexibility. Recent public statements from officials emphasize market-based alignment and sustainable value management. These phrases are significant. They often precede a change in monetary policy direction. It suggests Vietnam's central bank could be preparing the ground for a more flexible, appreciation-friendly environment. And here's another big piece of the puzzle: Vietnam's foreign reserves. Over the past few years, those reserves have grown to become some of the largest in Southeast Asia. That gives the central bank powerful tools to stabilize the Dong or let it strengthen without causing volatility. With that financial cushion in place, Vietnam has room to take cautious steps toward revaluation without risking economic turbulence. It's worth clarifying a key point here. Revaluation means the currency becomes stronger, while devaluation means it becomes weaker. What's being discussed right now is a possible revaluation, the dong gaining strength against the US dollar. Historically, countries only take that step when they feel confident about their economic fundamentals: strong growth, low inflation, and rising investment. Vietnam currently checks all those boxes. Still, expectations need to be realistic. A massive overnight revaluation doubling or tripling the dong's value is extremely unlikely. Modern central banks avoid that kind of shock. Instead, what we're likely seeing is a calculated policy adjustment, maybe expanding the trading band or setting a slightly stronger daily reference rate. It's slow, steady, and strategic. But over time, those small moves can build up to something much bigger. So what could push the dong even higher from here? Keep your eyes on three signals: GDP growth, foreign investment, and export demand. If Vietnam continues expanding at around 6 out of 7% per year and international companies keep moving production there, the upward momentum will only increase. And as long as global demand remains strong, Vietnam's trade surplus will keep putting positive pressure on its currency. Regional dynamics also play a role. Vietnam's policymakers must stay cautious, especially with neighboring countries like China and Thailand adjusting their own exchange strategies. If Vietnam's currency strengthens too quickly while others weaken, its export advantage could slip. That's why slow, deliberate moves are the safest path forward, and why experts believe the government is managing this transition very carefully. Some analysts think what we're witnessing could be the start of a multi-year appreciation path. Under that scenario, the dong could gradually strengthen a few percent each year as Vietnam transitions from an export-led economy to a more consumer-driven one. That would not only boost the country's purchasing power, but also signal growing confidence from international investors. For everyday people in Vietnam, the changes might feel subtle at first. A traveler might notice slightly better exchange rates. Importers might see lower costs for foreign goods. But the bigger impact is symbolic. A stronger dong reflects economic pride and credibility. It's a sign that Vietnam's decades of growth and reform are paying off. Still, policymakers won't take their eyes off potential risks. If the dong strengthens too fast, exporters could face difficulties, unemployment could tick up, and inflation patterns could shift. That's why the State Bank of Vietnam is likely to move carefully, monitoring every data point before taking further action. Stability remains the top priority. So where does that leave us today? Simply put, the Vietnamese dong may be entering a new era. It's still one of Asia's most tightly managed currencies, but with clear signals of gradual strengthening, it could be setting the stage for bigger moves down the road. This could mark the beginning of a policy evolution, one that reflects Vietnam's emergence as a true economic power in the region. For investors, this is the time to stay alert. Watch for official statements, central bank comments, and updated exchange data. Whether this adjustment is the first step of a long-term plan or just a temporary recalibration, it's a significant moment that deserves attention. Remember, currencies don't just measure money. They measure trust, performance, and national progress. Vietnam's rise from a developing nation to a global manufacturing powerhouse has been extraordinary. If the dong continues to strengthen, it will symbolize that transformation in a very real way. So stay tuned. The story of the Vietnamese dong in 2025 is far from over, and the next update could be even more surprising. Thanks for watching Iraqi Dinar. If you found this breakdown helpful, don't forget to like, subscribe, and turn on notifications so you never miss the latest updates on the Iraqi Dinar, the Vietnamese dong, and all major currency movements worldwide. The world of money never sleeps, and neither do we.